I thought that it's time to get back to YouTube and make some more long form content, get back into the mojo of, sharing real, true, authentic insights that actually show what the behind the scenes is of a swing trader, of a student who's studying at the same time. I have my final exams in 3 days, but here I am creating a YouTube video. But I wanted to really sort of touch upon what it is like to be a swing trader in the Indian markets recently, especially because it's been so difficult. It's not been an easy year for any swing trader out there. It's been one of the toughest years as a swing trader, and the reason for that is that we've been in a very deep bear market. And after that, we've been in a deeper sideways market. And in such times, we find it really difficult to take trades because as swing traders, we require momentum. Without momentum, without a clear trend, we cannot take trades. And that is exactly why, in this moment of time, I am personally acting like a silent cheetah. I'm the fastest animal on this planet, and I know that I can hunt down my prey within seconds. But I only wait for the right moment of time. And that is exactly what the life of a swing trader is. You wait for that perfect, most opportune time, and that is when you pounce. And right now, it's the time to sit back and enjoy the show without deploying any money. However, all of this being said, in November, I didn't take a single trade, but I listened to a podcast that really revolutionized the way that I look at the stock market. And that was a podcast by Stanley Druckenmiller. He's one of the most legendary fund managers. I'm not too sure if he's a hedge fund manager, but he's one of the most legendary fund managers that the US has produced. And he said something very important in one of the podcasts that he was doing. And that is that the reason why he's never had a negative year in the stock market so far is because whenever the stock market's down, whenever you're in a bear market, there's always opportunities elsewhere. And that is why in December, I took two trades. I took silver and gold, and I'm going to break them down for you. Why I took them, how could I have handled them better, and what would I do if I could go back in time to reverse my decisions. So let's break that down. That's the point of today's YouTube video. We are sort of making a trade recap, a December trade recap, plus just, coming back to YouTube, being more long form oriented, sitting down, talking to you guys, and really just having this real connection rather than the short form that we see on Instagram. So, what did I do? I've taken two trades. I've taken a trade in silver and I've taken a trade in gold. And these trades both were very good entries. I think one of the best entries that I've taken so far in this trading year, the financial year. But my exit plans should have been way better and I would have made much more money. So let's break that down. So in silver, I took my first trade on the 9th of December and it was a beautiful flag formation, right? Came up, consolidated, started respecting the 5 day moving average, lovely breakout. The next day it squats, and the third day it is an FOMC meeting, and because of that reason, I have to exit the stock. So no errors made in silver. Beautiful entry, exited according to the plans due to the FOMC meeting where you don't know what Powell will say, so you have to be careful. You don't want the commodity to gap down overnight, and you don't want to take an unnecessary stop loss. So I decided to get out in profits. However, the second trade, which is gold, is where I am absolutely disgusted with the way I handled the trade. I am really hard on myself when the trades do not go the way that I want them to be, and that is because I have decided that I personally am going to be the best Indian swing trader in this world. I want to be remembered with a legacy, and I want to have that impact that someone like Rakesh Jhunjhunwala has had or someone like Ramesh Damani has had. I want to make sure that I am remembered once I am gone, and that is why I'm very harsh with the way that I take my trades. So, what did I do wrong in gold? Let's break it down. Lovely VCP formation, super pivot, comes to the 10 day, breaks out, took a spot on entry in this name. Second day, however, stock moves upwards a percent and a half. Sorry, not the stock, the commodity moves upwards a percent and a half, squats right back down. Now, at the same time that I noticed the commodity squatting down, I was teaching in one of my classes, right, with a student one on one. I was having a session and I have split attention. I'm looking at the chart on one hand and I'm trying to teach on the other hand. And that is where I acted out of impulse. And that is what disgusts me and that is what I'm not happy with. I know as a trader, the most important thing for me is to have set rules and set emotions. And those were two things that I think I could have handled much more better in this trade. Now, does that mean I will go ahead and revenge trade? Absolutely not. When market opens on Monday, I am out of the position. I should have been better, and I was not, and that is my fault. But what did we learn from this trade? We learned very clearly that it is important to have a plan of action for each day. I have my plan of actions for the day that I enter my trade, but I do not have a plan of action for each day of holding. I sort of go with the flow because I have been in the markets for some time. But that's where I realized that that will not operate for a longer period of time, and I will have to ensure that when I'm handling big money, I have a daily plan of action. And that's what I've started doing. In my written journals, I now mention what the plan of the day is. What is my stop loss level? Input it in the system and ensure that after that I am not touching it at all unless the chart tells me to do so otherwise. Right? So these are some systems that I have put in place to ensure that I'm not making these dumb mistakes. Like gold is looking phenomenal, and I'm sure that this is going to go upwards from here. But just because of my bad trade management, just because I was scared of taking a loss because I have been on a losing streak in equities, I was like, you know what, it's okay, let me just get out. But that is not how I should operate. Even though I am in significant profits in my equity portfolio, just because I had two trades that did not go my way does not mean that that carries over to my separate asset class. But that is what makes trading so difficult. Those are the only two trades that I've taken in December. I've not been indulgent in the stock market because the stock market is currently below its 200-day moving average, and that is a small cap index. So I personally am not making any trades, still in 100% cash, but I really do feel like I should have handled gold a lot better. And I hope that it gives me another entry point from here on, a nice entry point which meets all of my entry criteria. And that is when I would take another trade. But apart from that, this journey in 2025 has been insane. I have gone from having no online presence to having an online presence, teaching students one on one, which I never thought I'd do, and at the same time grown so much as a trader, just in the ability to set out. I have probably taken less than 30 trades this entire year, and that is phenomenal for me. Only two trading weeks where you could have genuinely made an impact on your portfolio were in June, and I was able to catch on to that. I wanted to do a bit better, but that's another thing that I learned, position sizing. But we will keep that for another video, right? How you can size in a better way, how you can size bigger. Apart from that, let me know if you guys are liking this sort of style of content as well. Trying to be a bit more authentic, a bit more real, a bit more hands on. You know, what it really is like to be a trader, be a student, be someone who's handling students, Instagram, all of these things on my plate, trying to keep my mental sanity in place because it is so difficult to be on it every day when the progress is stagnant. And that is what I want to impart, that yes, there are going to be days. For me, this entire year has felt stagnant. It's been like I've been in the same position in my portfolio, same position across my Instagram. And that is where it's important to keep putting in the work, because one day when that entire pressure bubble bursts, you're just going to go up, right? So I'm just waiting for that time to come, at the same time continuing to put the work in, not stepping away. And that is why I have decided that it's time to go a bit more into content. I've sort of been slacking, and I don't like that. And now I'm going to be back into it. Let me know if you guys like this video, and I'll see you guys in the next one for another trade recap, or potentially a day in the life or something like that. Let me know what you guys think, and I'll see you guys in the next one. Thank you.